Afternoon, everyone. I'm Stephen Herwire, owner of Herwire Financial Plans with Direction. Today is May 3rd of 2024. After the market wrap, we're going to talk about life insurance. How much do I need? So, methods of determining need. Now, this is primarily for individuals, not so much business determining needs. That's a whole nother webcast. Okay, rule of thumb, that's one method where you just take a multiple of your salary. Income replacement, in-depth needs analysis, and my favorite, the financial plan. Okay, the multiple of your income, it's the simplest of all methods. You take your annual income and multiply it by a number. 10 or 12 is the usual multiple I see. Drawbacks of this method is it doesn't take into account things that are particular to your situation, like how many dependents you have, or if you don't have any, amount of debt you have, other obligations. It could result in being over or underinsured. Income replacement. This is where you're just trying to replace your paycheck if you're gone. You start with your annual income. You select what you think is a risk-free interest rate. Now, risk-free interest rate are determined by you. Every individual is going to have something different. People frequently use the interest rate on a 10-year treasury. Other people will use bank savings interest rates or money markets. Key thing is, are you as an individual comfortable that you can get that specific rate of return? Keep in mind, these rates change, but it's a good start. But like the multiple of the income, it is not going to take into account things that are particular to you. Well, to give you an example of how this is calculated, imagine if you're seeking to replace $50,000 a year in income and you think you can get 4% risk-free in a place that you're comfortable with. Then the amount needed to replace your income when you do the math is $1.25 million. Okay, in-depth needs analysis. Okay, so we start with an immediate money fund. This covers things like medical and hospital expense, funeral expenses, attorney and executor fees, probate court costs, and taxes. And then we look at the debts you have right now. This is all debts except for your mortgage. That'll be covered somewhere else. Emergency fund. This can be for literally anything. Examples include home repair, emergency home repairs, vehicle replacements, medical emergencies. And we get down to the mortgage or the rent payment fund. Now, with the mortgage, you could just say, I just want to pay off my mortgage, whatever that mortgage balance is. If I die, I want it paid off. Or you might just say, I want to pay a certain number of mortgage payments, and then my spouse can take it from there. Or if you're renting, certain number of rent payments. Keep in mind, you've got property tax payments over and above the mortgage. So even if the mortgage is paid off, some states are going to have a pretty hefty mortgage or property tax payment. The Child and Home Care Fund. Now, this is a calculation that's based on the youngest child in the house. Care will likely cost more if there's a toddler in the house than if the teenager is the youngest person in the house. There's a factor used by some agents that approximates based on the age of the youngest child. Educational fund. This is used if you want to pay for a chunk or all of somebody's college education, if you're not there to help pay for it. The family maintenance fund. This is used to provide an income that should the surviving spouse not have the ability to generate sufficient income to address other household expenses. Estate taxes. It's not a common need, but sometimes there is a need that has to be considered, especially given the possible sunset of the Tax Cuts and Jobs Acts, for which the estate lifetime exemption will drop from 13.6 million to 6.8 million. And this doesn't even take into account if your state has its own inheritance taxes. Then we take into account the amount of unearmarked savings you have and any other insurance you have in place, and we subtract that, That's how we come up with a number. And finally, my favorite, the financial plan determination. It's the most in-depth of the determinations. It's not as simple as the others, and it does take into account changing conditions like children graduating and leaving the nest, retirement, mortgage payoff. Most planning software will make the determination, and regular reviews will update the needed amounts. Sometimes a combination of permanent and term insurance are used to more easily adapt to changing needs. Most people are unaware you can get a combination of permanent and term life insurance from the same insurance company at the same time, and this makes the application simpler, and if necessary, you only need to do one medical or one paramedical exam. It's also used to make more efficient use of money spent on life insurance. This last week, we found out that term insurance costs a lot less than permanent insurance in the short term. And there are certain needs you're going to have that are going to be permanent needs, and then others not so much. Like, for instance, if you're a young family starting out, you've got a couple of kids, you just got your first mortgage, well, your life insurance needs likely to be different than 30 years later when the mortgage is paid off and your kids are out of the house. So what you can do for things that are temporary, like those two examples, is you can add a term policy on top of a permanent policy. That way, when the need no longer exists, you can call your agent and say, yeah, I don't need the term portion of my policy anymore. A couple of riders you may consider adding to your life insurance policy: disability waiver of premium. This pays your premiums if you get sick or hurt and can't work. A long-term care rider. This is if you cannot take care of yourself, and this is probably one of the best reasons to have a permanent policy, because for the term policy, they usually don't have this rider. The permanent one might be suited to covering retirement when a young breadwinner dies early and will not be contributing as much to the scheduled retirement plan. Or a long-term care needs where the policyholder, the insured, does live a long time, and all of a sudden they just can't take care of themselves. This can help pay for it. Things you should know about life insurance. When an agent gives you a quote, it is a best guess. The final price is determined by the insurance company after underwriting is complete and the policy is issued. There's three basic grades that influence the cost of insurance: rated, standard, and preferred. Rated is the most expensive. It means the insurance company will give you a policy, but you got problems, so they're going to charge you for it. Standard. Standard is where you only have a few problems and they will insure you. It's not as expensive as the rated. And then there's preferred. Preferred means you're in excellent health and they will give you a break on the rate. Now, keep in mind, insurance companies underwrite things differently. So you might be standard at one insurance company and preferred at another. So that's why it's important to have an independent agent to shop around for you. Most states give you a free look period, meaning that for a limited time, you can change your mind and get a full refund. So after I hand you the policy, depending on what state it's in, you've got a certain number of days to change your mind and you get your deposit back. There's usually a contestability period where the insurance company can refuse to pay under certain limited and specific circumstances. Life insurance gets more expensive as you age. Tobacco use will generally make the cost higher, and men generally pay more than women for the same amount of life insurance under the same conditions. Consult your qualified advisor to determine if you have enough life insurance for your situation. Sometimes a medical exam is not required. If you do not have a qualified advisor, contact me. I may be able to help. I am licensed in multiple states. There's no charge for the call. Every stage of life, you need a plan, okay? When you graduate, be it from welding school, engineering school, or law school, you're going to need a plan. Of course, it's going to answer, in this case, the most important question for you right then and there. How much do I need to be saving to retire in a time and manner of my choosing. The earlier you know that, the less it's going to come out of your wallet. When you get to that last 10 years before you retire, you're in the glide path. This is where we figure out, is the USS Retirement going to be ready to set sail on the appointed date? Then when you get into retirement, the primary question is, how do I avoid running out of money before I run out of life? And then finally, legacy. Legacy is, does what I worked hard for all my life get to where I wanted it to after I'm done with retirement? Can be reached at herwirefinancial.com. I do in-person, Zoom, and phone appointments. I am licensed and registered across several states and can easily add states if there's a need. If you'd like to schedule an appointment, you can click on the schedule an appointment button in the upper right-hand corner of my website. If you want to see more videos like this, go to my website and click on the YouTube channel. It's the red one. If your friends want more information, they can follow me on Facebook, LinkedIn, or Twitter. For those who prefer the good old-fashioned telephone, 518-631-2569, 518-631-2569. Do not text me there. You will be sad. There's a separate texting number there. Opinions voiced in this material are for general information only, not intended to provide specific advice or recommendations for any individual. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, no representation is made as to its completeness or accuracy. None of this is to be construed as tax or legal advice. Consult your advisor prior to taking any action. This material contains only general descriptions, not a solicitation to sell any insurance product, nor is it intended as any financial or tax advice. For information about specific insurance needs or situations, contact your insurance agent or feel free to contact me. This presentation is intended to assist in educating you about insurance generally and not to provide personal service. It may not take into account your personal characteristics such as budget, assets, risk tolerance, family situation, or activities which may affect the type of insurance that would be right for you. In addition, state insurance laws and insurance underwriting rules may affect available coverage and its cost. Guarantees are based on the claims paying ability of the issuing company. If you need more information or would like personal advice, you should consult an insurance professional, which I am. You may also visit your state's insurance website for more information. Everybody, have a terrific week. And